This is Alan Bush with the Daily Financial Forecast for Thursday, December 29th. Starting out with the stock index futures, we are seeing prices mixed to a little bit better today on a very lightly traded session, which you would normally expect this time of year. We do feel that the main trend is still higher, and higher prices are likely well into next year as the Fed, I think, is somewhat restrained in their process of raising interest rates next year. So even with the Fed likely to hike rates, we do anticipate additional strength in all of the major indices next year across the board, including new historical highs. Now, moving over to the currencies, seeing the dollar index under some pressure, and the main reason for this is that the probability of a rate increase at the May meeting next year has dropped to some degree. Yesterday, the probability was 38% that the Fed would raise by 25 basis points. Today, it has dropped down to 33%. So that undermined the dollar index to some degree. But keep in mind that the Fed is still the only major central bank that is on track to raise interest rates next year. We feel that there are probably 1 to 2 rate increases coming from the Fed next year, even though the Fed itself said that there could be 3 rate increases. One major East Coast bank said there could be 4 rate increases, but with 1 to 2, as we predict, that still is enough to sustain the bull market longer term in the dollar index. Also, we are seeing some additional strength coming into the euro currency on news that money supply in the Eurozone increasing more than anticipated. Of course, a rising money supply suggests increasing demand for money by companies in the Eurozone, so that is an expansionary number, and that tended to support the currency of the Eurozone. Now, moving over to the interest rate futures markets, somewhat of a recovery. Price is a little bit better, and I think the main reason is that the probability of a rate increase next year diminishing to some degree, or at least the amount of rate increases somewhat slower. So that supported the interest rate futures markets. No major economic news today other than the jobless claims, as we mentioned, coming in as expected. Longer term, we feel that rising inflation in the form of commodity inflation and wage inflation are very substantial negatives for the interest rate futures complex, especially the bonds. So I would look for new lows for the move at the long end of the curve next year. Also, we do believe that even though gold and silver have been under pressure recently, of course, they're still up quite a bit on the year, but more recently there has been some weakness. If we are right that inflation is coming back, that gold and silver are probably very good buying opportunities at these lower levels currently. So I think in 2017, I would look for some very substantial up moves in the precious metals. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.